And we don't care if you're climbing a corporate ladder or if you throw a ladder in your truck on the way to work. This show's for you. We want to help make you more street smart and avoid all the commission-based advice out there in the marketplace. And so we've got some intelligent talk radio here, intelligent folks in studio. First up, Scott Maurer, Advanta IRA. Welcome back in studio, sir.
Hey, good to be back, Brandon. Good to see you again.
Hey, my pleasure. Thanks for coming in. Also back in studio, Ron Brace of Brace Accounting. Welcome in, sir.
Thank you. It's great to be here, and tax time is over, so I'm well rested again.
Whew, I know you and Tom were working some long hours, weren't you?
Long hours,
getting it done. Yep, good to be back in a normal routine here, and thanks for coming back into the show. And this segment is brought to you by our health team, consisting of Michael Vogt. He's an expert massage therapist here in Tampa Bay with Back in Health Massage. He's located at 3750 Gun Highway in Tampa, and he is voted top 10 in massage massage services, that is, in the Tampa Bay Journal's Best in the Biz Awards. And also, part 2 of my health team is Ray Milton of Ray's Vegan Soul, where I'll hit you with the flavor. That's his tagline. He does a great job cooking these awesome meals for me. I live that to-go lifestyle. A lot of times I'm in my car. I sometimes laughingly say it's my office on wheels. So, when you have these awesome meals prepared, you can eat a healthy diet without pulling into the fast food chains and different things like that, and kind of thinking through your daily program. So shouts out to Michael Vogt, expert massage therapist, as well as Ray's Vegan Soul, and Ray Milton, part of my health team. And before we jump back into this great content, I want to touch on a couple of hot listings. I've got a couple $1 million listings here. Compliments. This first one is compliments of Victor Alleman over at Platinum MVP Realty. This is 1126 Marina Drive in Tarpon Springs. It's in Anclote Isles. 4 bedrooms, 4 bath. It is a 3,880 square feet, total square feet of 5,000 square feet. It's an extraordinary waterfront opportunity, boater's paradise, and it's one of the few available lots with deep water access to the Gulf of Mexico. It's 1126 Marina Drive, Tarpon Springs, in the Anclote Isles subdivision. $1.399 million just hit the market about a week ago. And we also have 414 South Royal Palm Way in Tampa. This is in Beach Park. 4 bedrooms, 3 full bath, 2 half bath, over 4,800 square foot of living space, listed at $1.27 million. Owners are motivated here on this beautiful beach park home in lovely Tampa Bay. All right, so we want to make you more street smart here with this show. There's a lot of geopolitical things happening in the news. Of course, we're in this nauseating election cycle that we're seeing, and we invited Scott Maurer, Advanta IRA, in here, kind of talk about things, alternative investment opportunities for you out there as an investor, potentially in real estate, other means. So, Scott, what are you seeing out there, man?
It's something I think we've seen over the years with clients that we have at Advanta. People that come to us at least looking for more information is really the frustration and the general what their options are for investing, whether it's their IRA, their other other retirement sources of funds, but frustration with the stock market and being that's what people think that's what they have to invest in and that's what they have to do, and the market goes up and down, no rhyme and reason necessarily to that, at least from the average investor's perspective. So. Right. That's why people are coming to us, at least, and at least when they get more information on how can I buy real estate in my IRA account and have real estate and the rental income that's associated with that be the driving force to really help me grow my retirement account, put that money in a safer place.
Right. Yeah, absolutely. You look back and you see, if your retirement plan is to chase stocks, to try to watch some of these financial shows on there, the guys hitting the buttons and saying buy, sell. How hard is that? To try to predict which stock is going to move up, which one. There's so many factors to consider. It
is. You're right. Trying to chase a stock, trying to chase that next investment. Some of our clients, they've held the same piece of real estate in their IRA with us for 10 years. They took their IRA 10 years ago. Found that property out on the 123 Main Street, nice little 3-2 house or a condo even, buying that in their IRA account, having that actually be the investment in their IRA. Yep. They've had 10 years now of rental income.
Yep.
Get a good tenant in there, good rents just coming back in. They may sell the property down the line and have profits from the sale, and that is actually the rental income is the dividend in their IRA.
Right.
And so for some people it's more consistent, and those clients that are doing that, like you said, are not chasing the next big investment, the next latest fad for investing. They found a property, good solid piece of real estate they could buy at a good price and get a tenant in have consistent income, consistent cash flow back into their retirement account.
Yeah, I love the real estate play. Obviously, I'm a little bit biased owning a real estate brokerage here and having a show called the Real Estate Quarterback Show. But it's an asset class that you can insure against flood or fire. You can protect the asset. You can protect the tax side of it as well from an Advanta IRA standpoint. There's so many pros when you look at real estate, and not many cons, really.
It is. I mean, and again, that's exactly what our clients and people that are coming to us are looking for and are thinking already. A lot of our clients are already real estate investors. They already have, 5, 10 rental properties or rehab projects they've done personally.
Yep.
Didn't realize that their IRA, their old 401k account they have sitting at a brokerage firm or a bank, earning them, little money or not, or being scared about what that's going on in that account, being able to use that cash to buy their next property with it. So a lot of our clients already real estate investors looking to do this just with a different source of funds. And then you got the people on the flip side that said, I'm giving up on the stock market, at least with some of my money. I need to get that money. I need to diversify that into a different asset class. And people do choose real estate. There's other things that we do, but real estate really is probably the number one asset we hold at Advanta.
Yeah, and then we'll talk about some of the other ways as well. With hard money loans or lending out your money in these certain situations, there's things you can do there. But to the other point too of the stocks, you look at the Enrons, you look at the AIGs, and when some of these the CEOs, they're playing the games, they're cooking the books, so to speak, just to keep the stock price a certain place until they get their retirement package. I mean, we've seen it happen. And there's a great way to avoid it. Yeah,
and again, if you look back, the last 10 years in real estate, someone who would have bought a property 10 years ago, within an IRA or even not, buying a property then, seeing the market go way up in that 05, 06 time, have it crash, starting to come back or has been coming back obviously now. But if you were buying that property as a long-term rental,
right,
the only thing you really care about at that time each month is the cash flow. If
right,
you're getting good positive cash flow, you're building wealth, you're building income, whether it's to your IRA or not, very solid investment. Again, you're not having to worry about the whims of the market if you look at it as a good long-term strategy.
Yeah, that's a great play. If you were to go out and buy a duplex, triplex, or a quad, for example, and you have, maybe you want to live in one side of it, or you just have that as a specific or a different investment, or maybe on the other side of town from where you live, you're going to be able to take advantage of that person paying your mortgage. First off, you're going to have the insurability, like we mentioned, the appreciation, and I really feel strongly that we are behind a lot of those, the problems that we have with the mortgage meltdown. The government came back in, they regulated, the loan programs that are available. There's not any of these crazy stated loans, ninja loans, all those loans that we've heard so much about. So, it's a great opportunity to get into the marketplace. You see a lot of investors jumping into apartment complexes now. I mean, what a great marketplace.
It is. And for most people using their IRA accounts, financing can be a little difficult. So a lot of the purchases we see buying property in your IRA is cash.
Right.
So you don't have to worry about a mortgage and worry about that element of financing. We also see people who will partner up. If my IRA doesn't have enough for the purchase price, you and I could partner up, my IRA, your personal funds, and go in on a deal together, split the income, split the expenses that way going forward, and still have a different investment in my IRA that I'm more comfortable with.
Now, can you do that in a LLC type of a capacity, or how would that be done?
You can. It's a different structure. You can have your IRA simply buy property and be on title, and have Advanta as the administrator, receiving the rents, paying the bills. There is another mechanism. If you so chose to have more control, you can establish an LLC simply for your own IRA, or if you're partnering up with other people, partnering in an LLC and having the LLC buy property. So it certainly is that's something we go over in a lot of the seminars and trainings that we do, pros and cons of both ways, and allowing people to then make the decision. That's what a self-directed IRA is. The client's in control, directing the activity and deciding what's best for them.
Yeah, that's awesome. There's so many things you can do. It's a great place to be in this economy right now. The things are happening. A lot of good positive outlooks here with the United States of America. It's Tampa, St. Pete, Clearwater in particularly. And that's Scott Maurer, Advanta IRA. And when we come back, we're going to hear from Ron Brace. He's Brace Accounting, owner of Brace Accounting here in Tampa Bay. He's a Lightning official as well. We're going to talk a little bit about the Lightning and more from our experts here in studio, listening to the Real Estate Quarterback Show and realestateradiotampa.com.
This is Work Done, and you're listening to the Real Estate Quarterback Show hosted by my man, Brandon Rhymes.
All right, welcome back. Thanks for sticking with us. Brandon Rhymes here, host of the Real Estate Quarterback Show. I'm the owner of Platinum MVP Realty and a top listing agent in Tampa Bay. Featured in Florida Realtor Magazine, Tampa Bay Business Journal, and the Tribune multiple times for helping our sellers profit more on the sale of their real estate properties. Now, we are in a severe lack of inventory market. If you're a seller out there, if you're on the fence, potentially thinking about selling, or you just want to know what the value of your most of the time number one asset is, shoot us a text message over to our hotline and we'll give you a free comparable market analysis. Basically the same thing. You pay $500 for an appraisal. We're going to do it for you for free. So for the first 5 listeners who text the word value to our hotline, we're going to give you a free comparable market analysis. Go ahead and text value now to 813-917-1894. Text value to 813-917-1894. Maybe you want to know what the value of your home. You might want to move closer to the beach, closer to work, whatever that might be. We'll let you know what the value of your home is, pull up those comparables for you. And this segment is brought to you by the Maids Cleaning Service. They do a great job cleaning our real estate properties, and they are referred for a reason. So we're here in studio live from iHeartRadio, beautiful South Florida here in sunny Tampa Bay. And first segment, we heard from Scott Maurer, Advanta IRA. We're going to hear more from him as well. We're going to switch gears. We're going to talk with Ronald Brace of Brace Accounting. He's the owner of Brace Accounting. Just got through another busy tax season. So what are you seeing out there, Ron?
Well, I'm seeing that everybody's glad the tax season is over.
Yeah.
I want to talk to some of those small business people, though, that maybe they're sole proprietors and they don't have a corporation or they don't have an LLC. Mm-hmm. Now is the time to do it. And in the state of Florida, you can do it yourself on SunBiz. It's very simple. But I just wanted to talk to the different entities and, and why you should have a corporation or an LLC. And, of course, the number one is protection from being sued. But the number two is you can save a lot of money by having an LLC or having an S Corp or a C Corp. And what happens if you're a sole proprietor or if you pay Social Security tax on all that net profit of your little business. So if you had a little business last year and you were a sole proprietor, look on the second page of your tax return and see how much self-employment tax that you paid. We can avoid that by incorporating you as an LLC or an S Corp, and save that money and put it in an IRA. That's what I try to do.
Yeah.
And now's the time to think about it. Do some research on it. But there's different entities, and I'll be glad to talk about that. The new thing now is the LLCs, and it's great. It gives you the protection. It's easy to do. There's not as many formalities as an S Corp or a C Corp. But the only little problem is if you don't set it up right, you might have to pay Social Security tax on that LLC. But there's a little thing that you can do, and it's very simple. Any accountant can do it for you. You can keep your LLC, but be taxed like an S Corp. And then when you tax like an S Corp, the profit is taxed only for federal taxes and no Social Security tax. So it's a little thing that do a little bit of research. Call an accountant. Call me. I'll be glad to explain everything to you, but it'll save you a lot of money. You just, on $10,000, it'll probably save you $1,500 in taxes.
Yeah.
It's crazy.
Yeah, it's interesting. It's more about a strategy, having that overall comprehensive strategy rather than just, going status quo like you've been doing potentially. You might want to huddle up, call an audible, look at an opportunity to go back and sit down with Ron. Sit down with Ron and his team. They're going to help you, understand the tax implications from what you're doing currently versus, what you could be doing if you were to set up an LLC, a PA, professional association. That's what I personally do with my real estate business. But, I see it a lot in real estate. People are just there instead of having some type of an entity that they close their real estate deals in the name of, they're collecting all these commissions into just, I guess, a sole proprietorship.
Yeah, and like I said, I tell some of my clients, save that Social Security money and put it in your IRA. So, and it's amazing how much money that you can possibly save. And anytime you want to come by the office, we'll look at last year's return and tell you how much we could save you just by incorporating you. And it starts when we do it. It's not like you're going to start in June and say, I've been an S Corp or LLC for the whole year. It starts when you apply for it. In the state of Florida, it's very simple to do. We tell a lot of people, go do your own corporation, then come and see me, and then I'll set you up with the kind of corporation it should be and I'll get you a federal ID number. So it's a money saver, and everyone should think about doing it right now if you're not. And just from a protection standpoint, it's a reason to do it for that. So.
Yeah, because they would have to, if someone were to sue you, they'd have to pierce that corporate veil to get to your personal assets. Is that what you're saying?
That is correct. And I'm not saying they can't do it.
Right.
But if you set your corporation up right, tell everybody that you're a corporation, put on your business cards that you are incorporated or your invoices, and you just have to set it up right and tell people from the very beginning you're an officer in your own corporation. So
that's right. Yeah, if you just joined us, you're listening to the Real Estate Quarterback Show here in studio from iHeartRadio. We're talking with Ron Brace. He's the owner of Brace Accounting. And Ron, tell us a little bit about the season of taxes that you just went through. What did you see come through there? Anything any abnormalities that you've seen? I know you at one time you were warning of some frauds and things happening out there as well.
It seems like the IRS had a better handle on fraudulent returns this year than in the past. I still had a couple. I actually had a couple tax returns where the taxpayer got a letter saying, someone tried to do your return, but we caught it. So please mail your return in. So they've recognized in some cases a return that is incorrect and doesn't belong to the right person. But in the IRS, I mean, we all make fun of them and give them a hard time, but it's amazing.
Not me.
Not you at all. But it's amazing. We can e-file a return, and in 20 minutes, we get an email back saying that it's been accepted. It's not accepted because you got a number wrong. Somebody claimed somebody else's child.
Yep.
It's amazing that little old me who did 1,600 tax returns, and then how many million are being filed, and in 30 to 20 minutes, they know that if there's something wrong. It's amazing.
What do you attribute that to? Is it just the advances in technology and automation?
Absolutely. And they want, eventually, nobody's going to be able to mail the return in. They want everything e-filed. So
makes sense, man. Let's save trees. Save the trees out there.
And if you mail returns now, you have to send a reason why you're mailing it. There's a form for that.
I live in the woods, and I'm like the Alaskan bush people.
Yeah, and there's no accountants in the woods, maybe. Yeah. But.
Great show, by the way, that Alaskan bush people. I love that.
Yeah, I know.
Have you ever seen that? Oh, it's a great show. But, so we're here talking with Ronald Brace Accounting. You're also on official for the NHL, doing a lot of these the Tampa Bay Lightning games. Tell us a little bit about that, Ron.
It is so exciting. I'm like the head statistician down there, and I've been working for the National Hockey League since the Lightning have been here. And in 24 years, I've missed 5 games, which I'm very proud of, and I'm very fortunate that my health was good. But we go to the game. There's a group of off-ice officials. That's what we're called. And I started out for the first year. I was in the penalty box for a whole year.
Wow!
And that was a blast. And then when they found out, when we went to more IT information for the NHL, they found out that I was pretty good at numbers. So I do stats. I mean, we and it's streamlined out every 5 seconds. It's amazing. If I make a mistake on putting up an assist, everybody knows about it. So it's amazing. The NHL.com, you can go on there anytime and find out what's going on at any game every 15 seconds that there's an update. And that's what we do. There's 5 of us upstairs that do stats and shots on goal, missed shots, block shots, hits, on. And we have to put where we did it on the ice, who hit who, and a block shot, who took the shot. It's crazy. But we're all pretty good at it. We've done it for a long time. We don't miss many games, and it's really a blast. And it was my night out in the middle of tax season. They said, how do you have time to do it? I said, I have to take time. Yeah. Get out of here and go have some fun.
Protect your sanity, right?
Yeah, and you become part of the show. It's great. It's just great. I love it to death.
Yeah, that's great, man. That's great. Over, what did you say, 25 years or so?
Yep.
You've missed only 5 games?
5 games in 24, and none because I was sick. 3, I was actually on vacation. They went on strike, and I said, I'm going on vacation. Then they settled the strike, and I was 3 games late coming back. So
that's not your fault.
Not my fault.
Very cool, man. Yeah, it's interesting, and you talk about. In the next segment, I want to talk a little bit about some of the crossover opportunities here between Scott Maurer, Advanta IRA, talking about the different tax implications and what you've seen on your side, Ron, from a tax standpoint on different IRAs, different investment vehicles that you you've seen and maybe some crossover opportunity. I want to remind our listeners out there, we're inviting you to our monthly gratitude party that we're having over at Hula Bay on Saturday, the 21st at noon. We're going to be having our real estate quarterback show and our sister brand, the consumer quarterback show. We're having a pool party over at Hula Bay at the pool right there. It's on Tyson Boulevard in South Tampa. Come out and say hello to our team. We'll have boats there from Freedom Boat Club as well, and some of our other partners can be bringing boats over. So we're going to have a good time at the monthly gratitude party on the 21st, just around the corner. And come out and join us and bring your questions. If you have any questions, finance questions, want to meet some of our partners, please do so. We got over 75 show partners now with the Real Estate Quarterback Show, and we all have a goal in mind, and that's to help you win. So stay with us. The best is yet to come. You're listening to the Real Estate Quarterback Show and realestateradiotampa.com.
This is Work Done, and you're listening to the Real Estate Quarterback Show hosted by my man, Brandon Rhymes.
Sticking with us, I'm Brandon Rhymes, your host here with the Real Estate Quarterback Show, and this segment is brought to you by Smart Move Moving and Storage, the official moving partner of the Real Estate Quarterback Show. Shouts out to Hannah and Ian over at Smart Move Moving and Storage for all your moving needs. And we're here in studio live from iHeartRadio, beautiful South Florida here, sunny Tampa Bay, in studio with Scott Maurer, Advanta IRA, as well as Ronald Brace of Brace Accounting, and our tax partner here with the Real Estate Quarterback Show. And let's go ahead and jump into some of those crossover opportunities, because again, as consumers out there, small business owners, many of you, we want to help you win. You're going to have a QAA formula. A lot of times you're going to have questions. We want to provide you action items and answers. So, Scott, I'll let you go first, man. Let's talk about contributions and some of those things.
Yeah, and I think Ron was mentioning different types of corporate structure. There's ways in which individuals can take advantage of the fact that they are a sole proprietor or they own their own small business, really to especially if they haven't saved it, either haven't saved enough for retirement yet or haven't even started. There's different investment vehicles that really help to get that jump start. More than just the ordinary, $5,500 a year you can put into an IRA or Roth. There are other types of accounts that allow you a much greater contribution on a year-to-year basis, and offer the tax benefits of getting deductions on your current tax returns.
Interesting. Yeah, and so let's jump into that. So you got SEPs.
I'd say the most common type of retirement account that we see kind of for a sole proprietor, whether it's a realtor or whether it's someone who owns their own business, is a SEP IRA. It's a simplified employee pension account, whereby you can defer up to 25% of your salary, of your earned income in a given year into a SEP IRA, up to a maximum of $53,000. So you think of a realtor who's got a lot of commissions, again, small business owners with just lots of income for the year, opening up a SEP, you could get a much larger deduction. I can let Ron talk about the deduction aspect and how that affects your tax return. But when you take, as opposed to taking, I think most people understand, if you're taking a $5,500 deduction versus a $20,000 deduction, $20,000 deduction helps you quite a bit more on your annual tax return. So opening up that possibility, if you are a small business owner, you're a sole proprietor, looking into a SEP IRA or even a solo 401k plan can get you, number one, not more money in your retirement account and a greater deduction on your tax return.
Yeah, and so you're going to be able to defer any taxes on that amount of monies that you put into that IRA. And the idea is then when you at some point when you do need to access it, you're not going to be in as high of an income bracket.
That's correct. Yeah, depending on where you're at now in your business and the tax rate you're paying, hopefully when you get to retirement age, your tax bracket, you're in a lower bracket at that time.
Right.
And you get the benefit. The money you put in now, it defers taxes until you take it out. It allows you, the power behind any basic IRA or tax deferral strategy is that as the income generates within that account, you don't pay taxes each step of the way. You compound your money that much more quickly, so that when you get to retirement age, there's more money there for you to live off of. And again, when you're pulling out at that time, paying money at a lower tax rate or paying taxes at a lower rate.
That's right. The power of compounding. What was it? Albert Einstein, right? We talk about that. He said he mentioned it was one of the wonders of the world.
Yes.
Compounding. So, Ron, what's your take on that, man?
Well, it's true. That's why you should look at your business entity and run it very professional. Find the best ways to save money. And cost of doing business should be some kind of a retirement account. Believe me, I know time goes by very fast, and before you know it, you're 60 years old and you got $30,000 in an IRA when you should have $300,000. Take a little bit now, save the money, budget for what you want to put away, and this is another reason you should have another entity like an LLC. And just think, if you can put $25,000 away into a retirement account, and you're in a 20% tax bracket, whether your IRA makes any money or not, you've saved $5,000 or $6,000 this year. It's amazing how much you can save. So now is the time. I don't care if you're 30 years old and you put $500 away this year. Run your business the right way, get the right entity, and budget for some money to go into a retirement account. And between, your financial planner and your accountant, they will help you. And like I said, even if it's $1,000 every year, it's going to add up. It's going to help. You're going to save tax dollars. And like I said, time goes by very fast. Before you know it, you're 50 years old, and you don't have enough put away.
Yeah, it sure does. And we can't rely on Social Security or anything from our government here, the way that things are going and the growth, and Congress with a 14% approval rating, and so that's why we want you to take control of your financial future, and that first 15-20% that needs to go into your financial freedom account. That needs to go into an account that you don't touch, and it's there for you when you turn your retirement age, whatever age you choose to retire. And if you're just joining us, you're listening to the Real Estate Quarterback Show. I'm your host here, Brandon Rhymes, owner of Platinum MVP Realty, and we're in studio as well with Scott Maurer, Advanta IRA, as well as Ronald Brace of Brace Accounting, and we're having an intelligent discussion about retirement planning, accounting, and investing in IRAs. So if you just joined us, maybe we could do a little recap here, Scott. With an IRA, there's so many ways that you can take a look at investing into real estate or other alternative types versus the traditional stock market.
There is, and again, it's something that most people just aren't aware of because they don't look for. They don't get hit in the face with it. Nobody brings it up to them. You have to sometimes find this information out on your own. And as you're mentioning, I mean, we can all sit back and hope our retirement account and hope Social Security is there and hope that what we've put away and what's going on is going to be there when we retire. Maybe it will be, but maybe not. And what our clients are choosing to do is taking responsibility for that now. Not going to sit back and just hope and wait and see. Take actions. Go buy a piece of rental property. Go make a private loan out of your IRA. Look at buying some precious metals within your IRA. There are other things you can do that your traditional financial brokerage account or bank account's not going to allow you to do with an IRA, but that is allowable under IRS rules. You do it right. Our job is to make sure to give you those rules, give you what the processes are, keep you on the right side of the rules so that it all goes smoothly. And at the end of the day, you're in more control of your retirement account, not sitting back hoping that everything's going to be there.
Yeah, so many people pull money out of a 401 their paycheck and put it into a 401k, and they call that a retirement plan. I call it a good start, but it's not what you need to do. It's and then a lot of the other folks, they live on someday I'll. Someday I'll do this, someday I'll do that. It's we got to make it to have the self-discipline, to get it done and make it a action item,
It's very true. Countless clients I've talked to over the years that, say, choosing to self-direct my IRA was the best thing that they did. Whether, it's not necessarily because of Advanta. We provided them the platform and the service to do it.
Right.
They made the decision on their own. I'm going to take control. I'm going to do something different. And saying it all changed when I did that. Or even clients who are newer saying, I should have done this 5 years ago.
Right.
I should have done this 10 years ago. No time like the present to actually, look at what you're doing and make sure that you're in control and you understand and you have a plan.
That's right. Yeah, if you want to take us up on that offer and you're able to send a text message right now, send a text message. Go ahead and text IRA to 813-917-1894. There's your action item. There's your call to action. If you're brave enough to make that step, let's do it. Let's do it together. We're going to put you in contact with our team over here. Text IRA to 813-917-1894, and we'll get you in touch with Scott and his team, and they're going to take good care of you over there at Advanta IRA. So, Ron, we just got out of this tax season, man. Busy time, and I'm just kind of curious, what else did you see? Did you see anything that stood out? Any success stories? Anything interesting happening this tax time?
No, unfortunately, it's still the economy is still struggling, and I've seen a lot of people that have lost their homes and been foreclosed on, and short sales, and that's still happening, and it's really sad.
Man,
but I did see some success stories where people made a lot more money. They had a lot more tax liability, etc. But it's still tough out there. The last 8 or 10 years is tough, and a lot of people, unfortunately, are on disability because they, for whatever reason, they went to the disability route, but it's still tough out there. But at the same time, there were some success stories, and as far as the IRS is concerned, I mean they're on top of it right now. So like I said, what I wanted to mention too is you people that are out there, now is the time to find somebody like Scott, somebody that can not only just give you a simple IRA or a Roth. He has some ideas, obviously, that I think some financial planners don't even mention. And there's accountants out there that they just want to count the beans. That's what they say. And at the end of the year, they said, oh, you made this much money. Find somebody who's going to help you now, give you a financial or quarterly. So let's save money now, and let's figure out a way that we can put more into our retirement. But now is the time. Plan now. Don't wait till January. It's too late. And find a professional that's going to help you and someone that's going to talk to you. Anytime you have a question, they need to be available. So now is the time to plan for this year. And like Scott said, time goes by, and before you know it, it's too late to have enough money to retire. And that's the unfortunate thing I see too, where the old folks come in and they have Social Security, a little bit of a retirement, and that's it. That's all they have. So, because times are tough. I'm not being critical. The last 10 years were tough.
Yeah, absolutely. Stay with us. More from our experts here in studio. When we come back, you're listening to the Real Estate Quarterback Show and realestateradio.tampa.com.
This is Work Done, and you're listening to the Real Estate Quarterback Show hosted by my man, Brandon Rhymes.
All right, welcome back. Thanks for sticking with us. Brandon Rhymes here, host of the Real Estate Quarterback Show. And this segment is brought to you by Greg over at, shouts out to Greg over at Printing Solutions, Inc., digitalprintingsource.com. Greg does a great job on our real estate flyers, some stuff for the show. Shouts out to Greg over at Printing Solutions, Inc. Website is digitalprintingsource.com. Does a great job on a lot of our real estate marketing materials, business cards, flyers. So we're back here in studio talking with Scott Maurer, Advanta IRA, as well as Ronald Brace of Brace Accounting. And I wanted to, between the break, we were kind of talking a little bit there, Ron, about, you're seeing some of these tax returns. You're seeing, pretty good sample size of what's going on in, a subset of Tampa Bay here, over 1,600 tax returns you mentioned. So just in generally speaking, you said you are seeing that it's still a tough economy out there.
It's a tough economy, and I have a lot of clients that will call me and say, oh, man, I got this 1099 for $84,000 because they foreclosed on my house. What am I going to do? Well, if it's your primary residence, it's simple. It goes away. I can make it go away. And if it's a rental property, I can make that go away. So most of those little issues, and they're major issues, it's not going to be a tax consequence for you. So there's ways of making it go away. Don't panic. Talk to an accountant. He'll show you and explain to you what you can do or what he'll do for you. But it's not a taxable consequence, fortunately, because you've lost. The whole idea is you've lost out on a property that you once owned, and you've lost money too. So everybody's a loser on that. But when it comes to your tax return, you don't have to get hit again.
So let's talk that through then. It's different than a 1099 that you get that is earned income. What is
it's that? Different. It's a 1099 that you will get, and the realtor will probably do it for you. Yeah. but it's not the same. It's not earned income or anything like that. It goes on a different form on your tax return. And like I said, it's there, but it's not taxable.
Okay.
So that's the main thing.
So it's not taxable. Okay, great. Yeah, because I think too, with what you're saying with it, a lot of the foreclosures, a lot of people earning less than they did the year before. I kind of look at this, the political cycle that we're in sometimes, and you hear, the Federal Reserve, some of their meetings that they've had recently about will they raise the rate, will they not? We're talking about the overnight lending rate, the prime rate that banks basically lend money to each other, and ultimately affects mortgage rates and auto loans. But there's been some reported fighting in those meetings, and you have to understand, you have to think a layer deeper there and wonder, okay, is it because it's an election year and we're doing posturing to see, we want to keep those rates low to try to keep the economy moving, but at the same time, the other side's going to be saying, well, we've got to stave off inflation. We got to make sure that, inflation doesn't set in and really affect our currency, our dollar. So there's a lot of things to consider, and then you also, with your point as well, Ron, is you think about unemployment, how it's reported, and when people stop looking for work, I guess for 4 weeks, all of a sudden now they're not unemployed, they're not looking for work. So now we can skew those numbers even more. So there's so many people that are unemployed or underemployed. And, there's a lot of people working off the books, working for cash money now because, a lot of people would point to Obamacare or, AKA the Affordable Health Care Act. So, I'd like to just get some opinion on that as well.
It's tough. Obamacare is a major problem when I do tax returns. I hear so many complaints. Yeah, I have Obamacare, but I got a $5,500 deductible. I'm spending $700 a month on health insurance, and I can't use it. Yeah, I got it. There's no penalty. And then the other thing is, when you get Obamacare, and be very careful, now is the time to report. If you said you made $20,000 and you're going to make $40,000, then they're going to want all their money back, and that's happened too. I did a return this year. They had to pay back $3,500 because one person worked and made $20,000, but their wife got Social Security, and that needed to be included as well. So that's the problem. I have some people that told me, I didn't get health insurance. I'll just take my lumps. It's cheaper than buying it and not using it. So, and I know sometimes it works for the lower income people, but there are so many people that health insurance is a major issue in this country right now.
Yeah, absolutely. Scott, any comments or parting words?
Yeah, just following up what I think what Ron's talking about today, it's so key that people miss. And we talk to people with their IRAs too. The value of a good CPA.
Yeah. To
really go over exactly what he's talking about, being able to give you that proper advice. And that's, again, sometimes people try to do things on their own or figure, hey, this is my lot in life, and whatever happens. Look to other professionals out there. Whether it's a CPA, whether it's someone like myself with retirement accounts, really look out and see. Don't just accept what's going on. Ask questions and find professionals to give you the right advice. Yeah,
on that point as well, with it was mentioned earlier in the show about these stockbrokers or financial advisors. We've talked several times on the show, Scott. Not all advisors are created equal, and it's not extremely difficult to get licensed in some of these series of selling these assets. And a lot of times, the major number one question you want to ask your wealth advisor is, are you a fiduciary? And I'll let Scott explain.
Yeah, because a lot of basically financial advisors usually fall into one of two buckets. They're either commission based, which means they're getting a fee every time they sell different investments, within your portfolio, whether it's beneficial for you or not, they collect that fee. Other financial advisors are fee-based, where they look at your portfolio and just charge you a flat fee to manage your assets. So know which one you have, because you're making sure, not trying to paint a broad brush with all advisors, but when you got a guy somebody who's commission-based, well, they have an incentive there to sell you additional products.
Right.
So just make sure you know what you're dealing with. One of the things, at least I think, a benefit of what we do is we charge simply a fee for our service to record keep and administer an account. It is up to you to decide what you want to invest in, how much you want to spend, et cetera. We'll keep you in line with the rules that the IRS has laid out. But we don't get that role of advising. But if you do have an advisor in other capacities, make sure you really understand how you're being charged.
Yeah, and a fiduciary also, they're going to have to put your, the customer's, the customer's well-being in front of theirs. And
Yes.
a lot of times if you're working for a certain firm, they're going to be selling you assets that they're going to make more commission on. I kind of relate it back to the mortgage side of things. A bunch of my beginnings was in the beginning of my career was in the mortgage side. So I was working for a company called Argent Mortgage Company. It was a subprime lender. And, then I went into retail where I was doing retail loans. So I could take someone to an A-paper lender and it would pay maybe a little less, a little more, but it would take longer, or you could put them to a subprime lender. So there's all these decisions, these moral decisions that the salesperson has to make, and a lot of it's going to depend on how much money he makes, how soon he makes his commissions, and maybe he's trying to hit a bracket, and if it's a bracket type of situation.
Yeah, and I've had people come in to look to move money from an IRA with another firm into an account with us to buy real estate and find out that the investment they're currently in their other IRA has severe surrender charges. They thought, I had this $100,000 IRA that I can simply move over, and find out, well, if you choose to move it now, you're only going to move 80. You're only moving 75 because of the type of investments. And the client, it was news to them that was going to happen.
Wow.
So again, they probably didn't understand up front what they were getting involved in.
Because they didn't ask the right questions,
Right.
up front. So that's so important to do that. And let's go ahead and enter our lightning round. All right, so what we're going to do here is top consumer tips, things to do, things to avoid. Scott Maurer, Advanta IRA, you're up first.
Yeah, just following up on what I just said, really educate yourself on the different investment options that are out there, whether it's for your retirement, your IRA, your 401k, or just your savings account. Know what you have out there, what is possible, and then make the decisions from there. You may decide real estate is not for you, and that's fine. But make sure you're at least making the educated decision.
Yeah, and you can also lend money to other folks through that IRA if you have extra cash sitting in there.
Certainly. Yeah, we've had a lot of people do private lending within their IRA, act as a bank.
That's right.
For somebody else.
Yeah, earn 7, 8, 10% on your money. And maybe it's a family member, somebody like and trust, and they've got an asset they can buy at a 50% loan to value. That's pretty low risk.
Yes.
So,
Yep.
Absolutely. So, Ronald Brace, you got a consumer tip for us?
Exactly. The same thing we've been talking about.
Yep.
Take your little business very serious. Look at every single thing that you're doing. Are you paying too much for your cell phone? Are you paying too much, for renting equipment or whatever? Save it now. Time goes by so fast. Save your money now and make more money at the same time. And find somebody that'll help you work and plan your business. Many times you'll see the accountant in January or February, or you'll call them in December and you can't get a hold of them. Mm-hmm. Find somebody that's going to take time with you every quarter and talk about how you can save money.
Right. Yeah. Get that strategy in place. It's an overall comprehensive strategy that we want you to, take a look at and employ. So I want to thank Scott Maurer, Advanta IRA, for coming in, and also Ronald Brace, Brace Accounting, from bringing this knowledge in and dropping the nuggets of advice on our listeners out there. Thanks so much. So, and we're going to be here same time and place, Monday through Friday, 7 p.m. to 8 p.m. Please join us. Check out our YouTube channel. We got some great video content on YouTube. All the local mayors. Warwick Dunn from Warwick Dunn Charities has been on the show.
Warwick Dunn. Warwick spins to the 10. He's to the 5, 4, 2. Touchdown.
Former USF football coach Jim Levitt's on this channel as well. Subscribe to our YouTube channel. We put all their videos up there. Any type of information that you need, any contacts, resources that you need. We want to be that turnkey solution. We want to quarterback these introductions to the finest folks in all of Tampa Bay. So please go out and consider making a random act of kindness. And realestateradio.tampa.com.